Hey everyone. Fisker continues to struggle as it realizes starting up an EV company is a lot harder than it thought, and overall the EV industry is growing at a lot slower pace than many had expected. So in this video, I'm going to provide some insight into what's going on with Fisker and what's going on with Fisker stock. So let's get into the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Fisker CEO Henrik Fisker saying that Fisker produced 10,193 oceans and delivered over 4,900 across 12 countries as he realizes that 2023 was a challenging year for Fisker. They acknowledged that these totals were below the guidance they provided during the year and significantly below the guidance. They continued to lower the guidance as the year progressed, coming down from initial estimates of, I heard, 40 to 60,000 for 2023. That was dropped to 20,000 and eventually dropped even further. So a significantly disappointing year for Fisker, and unfortunately, it's investors that are paying the price. It's investors that are paying the price. Fisker's stock price is down 98.58% off the high. 98.58% off the high. Throughout 2023, I cautioned investors not to buy Fisker stock, highlighting how difficult it is for EVs and the industry-wide struggles, and continuously Fisker, in fact, management came out and said that they felt their stock price was undervalued, trying to pump up the stock price at a time of extreme difficulty for Fisker stock and the Fisker performance. Now, down 98.58%, the stock is still struggling, and we're going to see a little bit later. The company actually highlighted the fact that they might go out of business this year. They might not have, in fact, they said they don't have enough money to continue operations throughout the year. They're going to need to raise additional capital from investors. And at what point are investors going to get tired of giving Fisker money to burn? At what point will investors get tired of giving Fisker money to burn? So, continuing, he says, we were not able to efficiently accommodate our backlog of the pace we and our customers desired and deserved. This led to the decision that we announced in January of a shift to a dealer partner model. Yeah, in addition to the slowing EV demand, Fisker had a number of company specific issues, one of which was this, that they weren't able to accommodate customers that already placed orders and accommodate existing sales, just fulfilling sales. They had a difficult time in that most basic task. Then there was news of a recall. They had issues with the car, the quality, and they had to issue a recall. And then they had several other issues that they needed to accommodate. And so that resulted in a change of an entire model. So now instead of doing direct to consumer, they're doing the dealer partnership model because they realize they can't make sales. They can't effectively run the business making sales directly to consumers. They're going to need the help of dealerships to facilitate sales. While that might help facilitate sales for Fisker, it's going to add costs. It's going to reduce profit margin because guess what? You got to pay dealerships, right? You got to pay them for this facilitation of sales. How much are you going to pay them? What is it going to be? Commission? Is it going to be a fixed rate? That's all going to eat into your sales, and that's not where the industry is going, right? That's not where consumers prefer, right? How many of you prefer going to a dealership to buy a car, right? That process, not very fun. The salesman will sit you down and try and extract every last penny while trying to sell you that car, right? And it could take hours, negotiation back and forth, inconvenient to be sure. That's why these newer EV companies, Rivian, Tesla, and others, Lucid and Fisker even, started out as this direct to consumer because that provided a nice tailwind. That's where consumers preferred to make purchases. No haggling, tell me what the price is, and let me decide on the features that I want without having somebody sitting there as a gatekeeper trying to extract every last penny from me. So that is not desirable, but it's what Fisker is left with because the direct to consumer didn't work. They couldn't do it. So that's not even a choice for Fisker anymore because they couldn't execute on that plan. Now they're left with this and they have to take what they can get. They have to take what they can get. So Fisker saying we recognize the EV market is growing at a slower pace. So we announced a head count reduction of approximately 15% of our workforce. I think that's prudent. I think you've got to start shrinking. You've got to lower your ambitions. I know you thought coming into this that you were going to be this huge EV company, but now that reality is setting in, you've got to lower expectations. You've got to tighten your belt, and you've really got to think about survival. You're burning through so much money that your survival is at risk here. So you've got to really tighten that belt, make sure every dollar is being spent on things that are going to help your business survive. And you could think about growth later, but right now you've just got to make sure you make it through this difficult growing period, this difficult growing pains that you're entering right now. So I think this was a prudent decision here. Shrink your workforce, get it down to a more sizable, a more realizable level. So Fisker saying that they anticipate delivering approximately 20 to 22,000 Oceans globally in 2024, and they expect the sales momentum to build throughout the year as their dealer footprint expands. And I've said this previously, I doubt they're going to hit this mark. I think this is going to be like 2023, where they give you an initial high number, and then as the year goes on, they lower this number as reality starts to set in again and sales start to come in lower than expected. I think they'll lower these estimates for 2024. Where do I think it'll end up? I think a number in the teens is more likely, something like 12 to 14,000 units for 2024 is more likely. If they want to sell these units, if they don't mind having inventory, then yeah, maybe they'll produce more, but they're talking about delivering. So if we're talking about delivery, I think in the teens is more realistic here, 12 to 14,000 units in 2024. Now, if it turns out better than that, I will be pleasantly surprised. I'm rooting for Fisker. I hope they make it. I think their cars are unique. I especially love the solar charging, the roof charging, where you can get some miles for free, essentially. You don't have to recharge. The car is self-charging. So I really hope that technology catches on. I hope Fisker survives so that they can continue developing that technology. I think charging and recharging is one of the sticking points for EVs. So if Fisker can further develop that technology and reduce the need to go plug the car in and wait and wait and wait for it to recharge, I think it has great potential, but it needs to make it through these tough times. So I'm certainly rooting for Fisker to make it through 2024. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.